Welcome back to another Power Pack session, specifically about the NBFCs and HFCs. The title of this session is What's Next for Housing Finance Companies? And let me tell you, ladies and gentlemen, I have a strong name here with me for this particular session. And the name is Mr. Keki Mistry, the Vice Chairman and CEO of the country's largest mortgage financing company, HDFC Limited. Mr. Mistry, glad to have you.
First of all, thank you so much for having me on the program, and all the best to your viewers for post-Diwali.
Thank you so much, sir. And I will begin with obviously, we are going to discuss what's next for HFCs, but let me discuss and take your perspective specifically on how's the current situation today for the NBFCs and HFCs. So the data is quite, confusing in many parts. There are some mismatches. At one side, the top lenders are saying the demand is not huge. On the other side, the loans are really cheap compared to what we had seen in last decades, not only for the housing companies, but also for home loans, but also for the auto loans. You have posted remarkable numbers in the last quarter. I would like to take your perspective on how is the current situation right now. How are NBFCs, HFCs dealing with the current situation, whether the demand is low or how companies are looking at the current situation?
So let me talk to you on housing, because that is
Right.
really our bread and butter. And in terms of demand for housing, very honestly, it's never been as strong as it is at this point of time. And there are several factors which are contributing to that. I won't get into the structural reasons for the demand. I'll talk about that later. But first, the primary reason is that if you look at the last 3 years, at least 3 years, maybe even 4 years, property prices, particularly in the metros, has remained where it was. I would say by and large across the country, but more in the metros. But income levels have consistently kept rising. So if you take 2017 to 2018 to 2019, 2020, little bit of lull because of COVID, and again back in 2021. So income levels have constantly been rising at 7-8% a year. Take a 4 year at 7 or 8% a year, you come to more than a 30% increase in the incomes of a customer, typically. But property prices are where they were 4 years ago. So therefore, the cost of a house as a multiple of the annual income of an individual has kept, it has become cheaper and cheaper, or more and more affordable. I won't say cheaper, I would use the word affordable. It has become more and more affordable for a person to buy a house at this point. This is one reason. The second reason is interest rates. Interest rates also play a role in determining affordability and improving sentiments. So interest rates have never been as low as they are at this point in time. I have in 40 years working in HDFC, never seen interest rates at sub 7% like they are now. So good quality customers. So you must remember this is all for top quality customers. And the third factor is the feel good effect. I think COVID is by and large, the effect of COVID at least is behind us. The second wave of COVID did not have any significant economic impact. Business activities back to normal, as you would see in the streets of all the major cities in India. Everything is working as if COVID never happened. So business activities back to normal, demand for jobs is increasing. If you look at certain industries like, what we read in the papers, IT industry, e-commerce industry, and all these heavy, labor-intensive industries, there is a lot of attrition because people are getting more and more opportunities to get better and better jobs. So all these factors, stock markets, take a look at the stock market. Even an average middle-class person has some investment in the stock market. And the way stock markets have performed in the last 1 year, everyone who has some investment in the stock market is feeling richer, feeling wealthier. The feel-good effect is stronger than ever before. So all these factors taken together is making it more and more attractive for a person to buy a property at this point in time. In addition to this are structural reasons. So structurally, the demand for housing in India will always remain high for a very long period of time. And the primary reason for that is the demographics in India.
Yes.
2/3 of our population today is below 35 years of age. That's a fact which is well known, well articulated, well talked about. What may not be so well known is that the average age of a first-time home buyer in India is about 38 or 39 years.
Right.
So it's not someone who's 20 years or 25 years or even 30 years who's buying a house, by and large. It's someone who's in his late 30s. And with two-thirds of the population today being below 35 years, it means that more people are going on a yearly basis, going to be in a situation where they will necessarily have to buy a house.
Right.
So to my mind, there will be a structural increase in the demand for housing and automatically therefore for housing financing.
Meaningful anecdotes are specifically on the structural demand and a great perspective here. But give me some breakup here. I would like to really learn from you. Where is the demand coming from? Is it from the major cities like metros, or is it also from the tier 3, tier 4 cities? Because obviously tier 2, tier 3 are already there. And also, is the demand really high for the high-end houses, which is your area specifically? Maybe the loan which is more than 50 lakh rupees, or also the affordable segment? Because I have seen a lot of small housing finance companies, have showing tremendous growth in the affordable housing segment. So can you just give me a breakup on that side?
So I would say if we look back at the period from 2017 till 2020, the demand was more in the tier 2, tier 3 towns, not that much in the metros. But all that has changed in the last 12 months. Now we are seeing renewed demand from the metros, whether it is Mumbai, whether it is Delhi, whether it is Bangalore, whether it is Hyderabad, whether it is Pune, whether it is any of the other major cities in India. So demand is coming today from all segments of the market. It's not just the middle income, affordable housing segment like in the past. It is coming even from the high-end market. To give you an example, our average loan size, which last year was about 27 lakhs, is this year, in this 6 months of this year, increased to 31.9 lakhs. So clearly meaning that the higher loan amount is a reflection of the fact that there is greater demand in the metro cities like Mumbai and Delhi, where typically loan amounts are higher because property prices are higher.
How sustainable this demand is? At one side, you're saying that the demand is really high, which absolutely is, a great thing for the economy like India. On the other side, there is a supply is also unlimited. Inventory, inventory is also really high. So how do you see the sustainability of this demand? Do you think this will continue for another 3, 4 years or something like that?
So in my view, the demand is very sustainable.
Yeah.
For various reasons. I already talked about the fact that if you look at the demographics in India, it clearly shows that for a very long, for a number of years, the demand will remain strong because of the fact that we have such a young population. The other parameter to look at is the mortgage to GDP ratio. Internationally, in all countries, to determine the level of saturation of housing loans or the penetration of housing loans, countries look at a ratio where they look at the total outstanding housing loans and compare that with the GDP of the country. In our case, that ratio is 11%. You compare that with Western countries, you compare that with other developing countries in Asia, the ratio is much, much higher. So we are a very underpenetrated market in that sense. And therefore, the potential to grow for a number of years is very, very high. Now, I can't tell you whether every quarter you are going to have the same growth or not. That is going to depend on a whole variety of factors. But structurally, if you look at the next 3 years, 5 years, 7 years, the growth will remain strong.
Okay. There were many changes in the way the BFSI companies are operating during COVID. Everyone went for a highest adoption of the digital. I'm sure HDFC Limited must have done a lot of things in the digital already. What kind of operational changes will still continue far more aggressively even after COVID, even after pandemic, according to you? Also, there were different models that came into existence. For example, co-lending, collaborations with the fintechs. So, what is your perspective there? What kind of partnerships you have with fintechs? How digital adoption is there at HDFC?
So first of all, we have been very, very technology savvy right from the time we started. And that is reflected in the fact that our cost structure is extremely low. You can only bring down your cost structure if you adopt the highest level of technology, which we've done over the years. Our cost income ratio at sub 8% is the lowest cost income ratio you will see for a retail financial institution, not in India, not in Asia, but probably one of the lowest in the world, which is a reflection of the level of technology that we've adopted. Now, as far as onboarding of customers is concerned, currently nearly a little under 90, I think it's 89% of our customers are onboarded digitally.
Okay.
We have tie-ups with a number of players, but you must understand one thing, that for a person acquiring a housing loan, it is the single largest investment he's going to make in his lifetime. It is not like buying a car or buying a refrigerator or buying a consumer durable. When you're buying a consumer durable, all you want is money at the lowest possible rate and as quickly as possible.
Yes.
When you're taking a housing loan, you need a lot more than just speed. You need to be 100% sure that the property you're buying is right, the developer is good, you will complete the project, the titles are right, and a whole host of other doubts or questions which are there in the minds of the customer. So whilst we have the best of digital capability, most customers want to come and physically meet us,
Okay.
physically talk to us, to understand some of these issues. So therefore, whilst technology plays a big role in onboarding a customer, at the end of the day, personal one-to-one contact with a customer is also great.
So, like you said, close to 90% of digital adoption is already there, specifically for the onboarding of customer. I'm sure you have your own channels, also your own channels of, disbursing loans and branches. So, going ahead, what is going to be your focus area? Will you focus more on the digital acquisition and reduce your branches or something like that? Or maybe, partner with only fintechs or something? What is your strategy?
I have already told you that
Yes.
people want face-to-face contact also.
Yes.
A customer buying a housing loan wants face-to-face contact.
Yes.
So while you can onboard the customer digitally, at the end of the day, for his satisfaction, you would need to have an office. So it's not that digital channels can substitute branches. They can never substitute branches. The branches will always be in existence. The digital channel will enable us to acquire a customer faster, acquire a customer in a very simple kind of a manner.
Okay. Noted your points and agree with you, sir. Let me take your perspective on the industry issues. So, what happened with ILNFS earlier and the DHFL? It had a huge impact on the NBFC companies. They faced liquidity issues, they faced regulatory issues. But we have seen many changes now. We have seen major developments. ILNFS has also shown great recovery, and DHLFS has already been acquired by someone. So, can we say we are out of the woods? Can we say we are out? I mean, I'm talking about the industry. Can we say the industry is out of the, what you can say, bad consequences?
I would think so. I mean, there are in any part of any world, any country you look at in the world, there will always be instances of 1, 2, 3, 4 entities which fail because of reasons specific to those companies. It's not something to do with the sector; it is reasons specific to those companies.
Mhm.
You see even in advanced countries like US, UK, Singapore, you name it, you've seen these kind of failures. So I don't think failures of 1 or 2 companies should mean that the sector is under threat or the sector is facing any major challenges. Yes, immediately after the aftermath of ILFS, raising funds for weaker non-banking finance companies became a challenge.
Okay, noted your
Because
point.
people start shifting their investments from where they perceive to be risky instruments to what they perceive as safe instruments. HDFC has fortunately always been a beneficiary of that period
Hmm.
because we have been AAA rated right from the time the process of rating started.
Hmm.
Carry a very high capital adequacy ratio in any case, over 21%.
Hmm.
In addition to the high level of capital adequacy we carry, we also have a huge amount of unrealized gain on our investments. Huge amount of unrecognized gain on our investments. So if we mark to market our investments in HDFC Bank, HDFC Life, HDFC Asset Management, all of which are held in a balance sheet at historical cost, the unrealized gain will be more than 2,75,000 crores. That is the unrealized gain on our investments. So there is a huge amount of unrecognized gain. So that is why investors, depositors, rating agencies obviously take cognizance of that fact when
Hmm.
they place money. So whenever there is any crisis in the system,
Hmm.
we fortunately touch wood have been beneficial.
Okay, noted your points. So, one more question that comes to my mind, since the demand is really high, that you said, are you a bit cautious also in terms of your due diligence, considering what we saw in the pandemic? Because ultimately, it's not about the demand or the disbursal, but the collection, right? That is a major part for the any lender. So, are you a bit cautious, or have you maybe, what you can say, put more layers on your due diligence strategies, considering a lot
I
of
mean,
people have also lost jobs and everything in the industry?
our due diligence has always been very strong. which is reflected in the quality of our loans.
Mhm.
If you look at if you look at June 2021, we had the effect of the second wave of COVID, and we did see a rise in our individual non-performing loan levels to more than 1.2%,
Hmm.
1.7%. But that has all got captured, and again we've started seeing the recoveries improving significantly. So we have adopted the best of practices as far as due diligence of a customer is concerned. And these are practices which have to keep getting refined on a continuous basis as you learn, as you have more and more experience.
Hmm.
So it's an ongoing process. At no point of time can you say that it is completed or that your method of appraisal is final and there will never be a change. There will be a change depending on how markets pan out.
Green finance or sustainable finance is talk of the town nowadays. Everybody is talking about it. By any chance, HDFC Limited is thinking in that direction, specifically about the green housing, green projects?
Sure. We've already done that.
Mhm.
We have got raised funds under two programs, primarily for financing green projects.
Mhm.
We've raised money from international agencies, which is a total of 450 million US dollars, which is explicitly intended for certain kinds of activities which are environment friendly, green friendly, and so on and so forth. Similarly, we have a deposit product, which is called HDFC Green Deposits.
Hmm.
So we have this green deposits where also customers can put money in that deposit product, and the money collected in that deposit product will be used primarily for or entirely for green projects.
Let me take your perspective on the economy. I mean, not exactly the economy, but if you look at the economic indicators, the GST collections are high, IIP data is very supportive. RBI has been continuing with accommodative stance and ensured that the liquidity will be there. The finance minister is also thinking of double-digit growth in next 3 to 5 years. And for HFCs, ICRA has come with a report that 8 to 10% of growth will be there in this sector in FY 2022. Uh, how do you read these indicators, and what kind of growth do you see for housing finance companies going ahead in next 3 to 5 years?
I mean, I've answered that question earlier when I've talked about growth for the housing system, and I've said that the growth will remain strong and sustainable for a very long period of time. You can't get into numbers on one quarter may be higher, one quarter may be lower. These are things which will happen in the normal course, but sustainably over the next 3, 5, 7 years, I would expect the growth to remain strong. As far as economy is concerned, I think I must compliment RBI. I think they've done a phenomenal job at the time of when COVID set in 2020, not only in ensuring that there is adequate liquidity in the system, but also more importantly, or equally importantly, in ensuring that the liquidity reaches every segment of the market. So there was no segment of the market which was starved of liquidity. Everyone had liquidity. And that is why we come out of this whole process completely unscathed. As far as the economy is concerned, again, I mentioned this earlier, economic growth is very strong. We see the activity, you see this activity on a day-to-day basis. You take the amount of time it takes to commute from your house to the office, and this would apply to all the major cities in India. That time is more than what it used to be in pre-COVID times. So clearly, and you see the crowds on the road, you see the crowds on shopping, Diwali time, the number of people that were shopping, which is all coming out of this feel-good effect that is there in the economy. So I would expect economic growth to be very strong.
Okay, noted your points. And the last question, uh, if we want to strengthen the HFCs, obviously we are seeing the strong growth and the same will continue. But if we want to strengthen the HFCs, what kind of changes do you think that the regulator, the policymaker should adopt or should, help you in terms of HFCs, to strengthen the HFCs going
I
forward?
would not so much the HFCs, but the housing system. The housing system requires funding to be provided to developers.
Right.
Today, our focus is more on funding individuals. HDFC's focus is largely on funding individuals. We also fund developers.
Yeah.
If you look at the breakdown of a book today, 9% of on a balance sheet basis of our loans are to property developers. And the bulk of it is to individuals. But it is also important to have a system in place, a regulatory process in place, where lending money to developers is encouraged in some form or other. It could mean some changes in regulations. It could mean something different. I don't know. That's a matter of debate. But that is one area which is important, because unless developers get funding from
Right.
the banking system, from the HFCs, from the NBFCs. Their ability to construct more and more projects will get impacted. Else they have to borrow money from private equity investors, from real estate funds, where the lending rates are extremely high. So it's important that the cost of funding is brought down, because through that process, you can bring down the cost of a house.
Uh, Valid point, sir, and a meaningful one. Thank you so much for sharing your perspective at this session, and highlighting the growth strategy for the HFCs and how do you see the future for the HFCs. Thank you so much for your participation.
Thank you.